Hello everyone, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live presentation. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. If you have any questions or comments during this presentation, over on the right hand side is your GoToWebinar control panel. Please enter your question or comments there. I'll be more than glad to get to them in the order that they're received. If for some reason I miss your question, don't hesitate to repeat your question because with the number of people in the room, sometimes it's easy to overlook a question. So I want to make sure I cover all your questions. I want to make sure I show you everything you want to see and demonstrate for you exactly what you came here to see. I want to make sure everyone knows that we are here for educational purposes only, that we are not registered investment advisors. We don't run an investment advisory service. So make sure you understand that. We'll make sure that you understand that there are risks involved in trading in the forex, stock, futures, and equity markets. Make sure you understand what these risks are, that you are willing to accept the risks, and that you don't trade with live money, with real money in a live account until you've first proven you can consistently and profitably trade in a simulated account. We may hold positions that we talk about today. I'll let you know ahead of time that we either do hold or are in current positions. And make sure that if you are going to start investing or trading, make sure you get advice from a competent financial advisor before investing any of your money on any of the instruments that we may discuss today. Again, this is for educational purposes only. Today, I'm set up on NinjaTrader 7. This will probably be the last week I'll be showing NinjaTrader 7 because we're going to be launching NinjaTrader 8 this week. And from here on out, I'll probably be showing the NinjaTrader 8 platform. We've spent a long time in trying to get it up and running. I think we've got a good product now. We're going to be pushing it out to you guys who are current NinjaTrader users. I've been noticing the NASDAQ this morning. I got a specific request for looking at that this morning, so I'd like to do that. As you know, I like to come in and start looking at the markets right around 6 o'clock in the morning. That's about the time I get out of bed and start getting my day going. So I saw this setup here coming into the 6 o'clock time, and right about 6:30 this morning. You can see that after the overnight action, this is the open of the London session. There was a lot of action in the futures markets around the London market open and around the U.S. market open. And you can see just prior to the U.S. market, some action took place this morning. But if you're following Hawkeye and if you are following our specific rules, then I'm going to walk this trade through right now. And even if you were doing this, following the 6 ways the market moves and our 3-step entry exit method, this trade was set up for you, and I want to make sure you understand the entry and management of the trade. If you look at the current setup here, you can see this is a congestion. Right here was a trend run. This is a congestion entrance. You look back, you draw a horizontal line from the pivot high. Okay, look for the nearest pivot low. Contract your range based upon new pivots, and this bar right here then becomes a break of congestion. Even though we do look like we are in a congested range, based upon the pivot rules, we are in a breakout. So in this particular bar, a close greater than the previous range, this becomes a congestion breakout. With a congestion breakout, by definition, this now becomes a new trend run. So Hawkeye color codes this with a green trend dot showing that it is a resumption of its already long trend. You can see the direction of the trend based upon the stop. The Hawkeye stop shows you the color of the trend that you're currently in, whether the dots are red or white for a red trend or white or green for a long or green trend. So when that trend dot goes green, that shows that we're in a new green trend. But is this a location for us to take a trade? if we look at this point right here, we can see that the volume on the second time frame, the heat map on the second time frame, the volume on the third time frame, nothing is ready yet. So this is premature entry. So Hawkeye is saying wait for the trade to set up more before you enter. The second bar closed, you can see that volume is starting to come in on the third time frame. So we get a signal for entry, but you can see second time frame is still not quite there yet. So this is still premature, and you can see structurally we are still within a value area, which price kind of likes to hang out. We haven't seen any type of a breakout yet. So if we go to the next price bar, you can see a negative volume starting to come back in again. So you can still, this is still a little premature. It's at this point right here that we start to see a bar, which is not quite a strong bar. Let me pull this up and see if we can get that magnified. You can see that bar. See how the close is greater than the open, but the close is in the very middle of that price bar. Okay. We can see we have a nice signal generated on the roadkill on the second time frame, but notice the heat map. See that? See how bright red that heat map is? It's still saying this is premature. So along with the weak price bar and the momentum, even though we got a double dot signal showing that volume and trend have gone into sync, the heat map is saying not quite yet. Not quite yet. So we wait. Okay. Now there's a very nice volume spike. You can see a red volume radar on our volume spike. That would have been a great place to enter, but again, we still can't enter because our heat map hasn't entered, hasn't given us the ability to take that trade yet. So we sit back on our hands and continue to wait, and this is what we're waiting for right here. We're waiting for the momentum of that trend to start to show some weakness. And this was actually strong enough to pull it from a bright red to a bright green. We got a confirmed roadkill entry here. Okay, a trend entry signal with volume. Momentum, we got second time frame confirmed volume, but notice the fastest time frame volume has neutral or white volume. Okay, we cannot enter if our fastest time frame volume is not in agreement. So this also keeps us out of this trade for now. For now, we still can't enter this trade. We've got several signals, but those signals are only as good as the fundamentals behind the trade. So we'll just go ahead and continue to step through this. Next bar is the first bar where we see a nice green spike, volume, momentum, and heat map. And you're saying, but it's too late in the trade. I can't get in at this point. Well, that's not necessarily true. This is the first bar where you see confirmed a strong bar, volume, momentum on your second time frame, volume on your third time frame, aligned with the volume and momentum of your first time frame. So this right here then becomes your trigger bar. Your trigger bar is basically, this is the bar that says, I'm going to enter. And that means you enter based on that bar, and the following bar then becomes your entry bar. So that's your trigger bar, and that's your entry bar right there. So this is where you're going to be entering your trade anywhere right along this area right here. So if you were to enter the trade at that point, then you'd be putting your levels at this point here. So you're going to enter anywhere on this bar. The open was here, the close was here, so any price field anywhere within that bar would have been your trade entry on that point. Okay, your stop level, your stop is either the Hawkeye stop or your level stop, whichever is closer to price. So this will be where your hard stop will be based upon the settings that you've got. You're going to be taking profits at levels either 2 or 3 and level 5 based upon the current setup. Third bar, looks like we've entered into a pause or consolidation range in the upper part of this price bar, but notice that volume has gone neutral, but the longer term volume has continued to remain buying. You can see that buying has continued to come back in again, but we have neutral volume still on the second time frame. Will this trade continue to hold? We can start to see the volume starting to increase. Third time frame, we went ultra low volume. Ultra low volume is a sign that there's a potential reversal or that price might not continue. Now, in an uptrend, ultra low volume, the price can continue to go up on low volume. But if this were a downtrend, then price would not continue to go down on low volume. So if you see this blue dot on a downtrend, then that's a very good sign that that trade is probably not going to continue to progress. At this point, you can see that right at your entry, you're just at break even right now. So this trade is still developing. It's still showing signs that this is a plateau, and it looks like it's starting to flag. We are in a very strong upward move, so let's see if this is going to continue. Longer time frame volume is continuing, but we are neutral also on our second time frame. Volume has come back in green. You can see that this has generated a signal, and if you had not entered on the original signal, then this generates a potential re-entry point. And we can see, based upon the congested range that was here, that this is a first close outside of that high range. So this does give you a potential re-entry point if you had not entered on the original trade. But notice that the volume on the second time frame is still neutral. So if you are waiting for 3 time frame alignment, that is not the location. That is the location right there. This is where you got a confirmed 3 time frame alignment. That becomes your new trigger bar. So if you had missed the original trade, then this now becomes the new trade entry point. Is everyone following me up to this point? Any questions so far at this point? This indicator right here is the Hawkeye Roadkill. The Hawkeye Roadkill shows us the second time frame, trend, volume, and heat map. The trend, volume, and heat map of the second time frame is 2 times the current time frame of the chart. In this case, a 3-minute. This is a 6-minute trend dot. This is a 6-minute volume, and this is a 6-minute heat map. This is the third time frame, so it'd be 4 times the initial time frame. So this is a 12-minute volume. The dots that you see here are signals that are generated when the fastest time frame aligns with either of these time frames. And this is simply the volume and heat map of the original time frame. All right, let's continue to walk this trade through. We got to close above a level 1. We need to see a close above level 2 in order to move my stop up to a break even. If the price comes back down and hits my stop or the Hawkeye stop, whichever is closer, I exit the trade. So now you can see that my stop is now a little bit closer. So I'll be moving my stop based upon the Hawkeye stop now and not the levels. See that? Now my stop is starting to increase as the price increases. Volume is starting to come back in with strength. That's a good sign. If you had entered on the secondary signal here, then you can see that you would already be trading and your stop would probably be right about this point, but you'd continue to take this trade as it moves. There's our first close above level 2. So then we take our stop and we move it up to the 0 line, break even. But you can see the Hawkeye stop is almost already at the 0 line anyway. So again, if the Hawkeye stop is closer to price than the level stop, then make sure you move your stop based upon the one that's closest to price. Okay. Continue to see as this trade develops. Volume is still strong, so there's no reason for us to get out of the trade. We're at a very good profit point, but there's no need for us to exit the trade. The stops have leveled out. This is where our current stop is. It stopped us. We are in profit, so this is a no loss trade. We haven't taken any profits out yet because we're holding and waiting for level 3 to come in. Let's see where the level 3 is. There it is, right about a 68.1075. Volume is still good. We can see some weakness on the second time frame volume, but we're still going to hold. We're waiting for a price to hit level 3. Once it hits level 3, then we will take our first profit target. Level 3 is a 3-to-1 risk reward ratio. So we're looking at trying to take 3 times the amount of risk that we had open in the trade. Currently, our stops are continuing to move up, an automatic trailing stop. So we are in a no risk situation at this point. If price came back down, it would stop us out here, and we would still have a small profit on the trade. The reason I said there's no reason to even think about getting out also is because notice how the trend dots are acting as a low side support. And the price is not even closing below the dots, and the dots are still rising. So that tells us we are still in a good confirmed uptrend. Sorry, that's a 58.10. My mistake. 58.10. So as price continues to develop, you can see some weakness coming in. You can see that price closed below the trend dot, but the trend dots are still rising. So for now, there's no need to panic. We will continue to wait and hold this. And there was a nice big spike. Price pushed up through the level 3. So that was our first profit take. So on this first move, we'll take this right from there, and we will say that that first profit take was there. Then we'll continue to see as price develops up. Level 5 is our second profit target right there. So we're waiting for that one to get hit. If we got a stop or a exit above level 3, then we move our stops up to level 1. We always will stay 2 levels behind current price, or the Hawkeye stop, whichever is closer. If price closes above level 4, then we will move our stop to a level 2. Price is still not closing. Notice that how price closed below the trend dot. The trend dots are still rising. This is a pause. That just says that the market's taking a small breather, and obviously it took a small short breather because it was getting ready to roll. Market makers were trying to get good prices or even stop people out before it jumped back up to the current levels. Now you can see volume is starting to come back in again. This volume is increasing in buying. Okay, so we'll continue to hold as long as the trend remains intact. And there's our level 5. We had a resting order to take profit at level 5. So we'll take that level 5 right there. We've got to close above level 5, so our stop is now at level 3. And then the last contract in this is going to be a runner. So we'll continue to just hold this. We normally would take a level 7 otherwise, but we'll continue just to hold this until we get stopped out. And we'll let the stops continue to rise if price continues. There's a close above level 6, so our stop is now at a level 4. There's level 7, so now our stop is at level 5. Hawkeye stops are a little bit below level 5, so if price comes back down and hits level 5, we will be out of the trade. Now the Hawkeye stops are right at level 5, so they've equalized. We have entered into congestion. See, this is a congestion entrance where the trend dots have gone flat and the close is less than the trend dots. So now we can see that the upper channel of congestion is right here. Here's our pivot low. This becomes our low channel of congestion. This is now a congestion channel. We will continue to hold as the price breaks up, but if it breaks down below this congestion channel, we exit the trade. There it is. This is a close below the pivot. It has not closed below the stop, and it hasn't closed below this stop, but because we exited from congestion against the direction of our trend, then my rule tells me to get out of the trade at that point. So at this point, I lock in the final contract, exit the trade at this point, and complete the trade. So first one, I was able to take 6 points, second 10 points, third 10 and 3/4 points on that, just by following the rules and allowing my trade to develop as the trade progressed. It wasn't the very best entry, but I was waiting for the highest probability and the lowest amount of risk. And that usually occurs when all of the signals align across all 3 of our time frames. And now let's go up to the current time. You can see here is our current time. The market has really gone down and sold off based upon that. So if that were the case, you can see as it developed down, we got out at this point right here, which is a good safe place to get. We would have exited anyway because at this point the trend changed to a downtrend. And then at this point it changed back to an uptrend. So it went a little bit wacky. And it's not very wise to be in a market at the open of a large market anyway. So don't be taking trades prior to the opening of a market if you're not already in the trade. Okay? So based upon the opening of the market came, where is that? No, there it is. Right there at 9:30. The market was already showing weakness coming down into this, and when the market opened, you have a big, nice bar sinking you down into that first and second time frame, but third time frame didn't push that in. Second time frame gave us a nice, clean entry signal right there, where you got alignment of your second and third time frames with your first time frame on a strong bar. So this then at this point became your entry point for your downward move. Notice it wasn't the best entry point because the price and the volume still had to adjust itself. So based upon that, we have a new trend run established, but the signal did not get clear until this point. This becomes now our highest probability entry point. And you can do the exact same thing from this. As the trade progresses, you continue to monitor this trade and trade this as the trade develops and strengthens. Any questions so far? Again, I was late to this trade. I'm not in this trade live, but showing you and watching as this trade develops, the signal and the alignment of the multiple time frames shows you the exact position to enter. It shows you the risk needed to take the trade and to hold the trade. Level 3, level 5, wait for your runner. Close below level 6, we are at a level 4 stop. "15 minutes" as the time that I wait after the market opens before I enter any new trades. That was at 12 minutes right there, 13 minutes. This is 13 minutes into the session. Absolutely. Longer term, what does this look like longer term? All right, let me pop over and show you that. Let me pull that correction in. All right, looking at the longer term NASDAQ, you can see that we are on a nice extended long move. There was a very short correction that came back in here, but you can see based upon the congestion channels that the break of congestion came at this point right there. A confirmed re-entry signal long came in right here for a longer term move, which occurred about 57.81 and pushed up to the highs of 58.14, which is about what was it, 30 NASDAQ points, but it's pulling back into that same initial opening place right now. It's still on a nice confirmed trend run, and price can even come all the way back down here before the daily will say that this is showing any signs of near-term correction. Okay, so looking at that daily, if you're looking at it intraday, let's look at this. Looking at the Qs, you can see the same thing on a 90, 180, or 390. These are incremental based upon normal equity markets. They're nice even markets because they're about 395 minutes in a normal trading day. 390, something like that. So these are very good divisions. 90 to 180. 180 goes to 360, but 390 gives you a full day. So instead of going a 95, 185, or so forth, I just took it up, stretched it just a little bit. So you can see the same input. On a 90-minute chart, you can see that this down move is a nice break. If we can get a break below this range right here, it will confirm a new trend down on a 90-minute chart. But you can see the second and third time frame are still a long way to go before they come into a line. So this trade would need to develop quite a bit before we look to this as a continuation move. If you're just trading it through the day, I don't have a NASDAQ set up here, but looking at the S&P, looks like they had a gap fill. So look, if you're trading gap fill strategies, then a big market open gap shows a really nice gap fill strategy, consolidation, and then continuation on that move. Here was your break of your 15-minute range right there. So you can see that that break of the 15-minute range got you right there. So that would have given you an initial trigger to enter, given that the rest of the markets were in line, and in this case it was. And then that would have given you your entry point right around in here somewhere. and then a continuation trade right around in there. So looking at the detail of the trade, whether you're trading the tick charts, whether you're trading the time charts, what market that you're trading, the tools can be applied and used in any of the markets to give you an excellent way to trade using rule-based definitive entry and exit methods. It keeps you out of your head. It gives you a way to define your entries and your exits based upon a rule set that has shown to be consistently profitable. And once you understand the tools and how to apply them to your chart, then you can see the application is extremely straightforward and logical. All right, my zones are telling me that this break below the lower zone is going to set up a nice cascade event. So once that one becomes broken, you can see that 57.50 then becomes the next lower side target. Chances are very good we could retest a 57.72. So I break below, price coming back up to retest that. So prior support becomes current resistance. So I would expect a new supply zone to form at this point and it to be around the 57.72 range for retest, and then going on to a potential 57.50 target to the downside. Okay, hello, yes, this is currently a live chart. So we're currently watching the markets develop with a lot of weakness. The fat boy is showing us very consolidated, very weak, very oversold markets here. Thank you, Reg. Please look at the ZB on the same end. The ZB, that's the US, right? Is that the bond? Bond had just given us a new re-entry roadkill signal at this point here. Oh, that's the, I've got both of them on. Yeah. You're going to get small differences here because of the nature of the beast. Level 3, level 5. The ZB is a on NinjaTrader. Okay, so let me pop over there real quick then for you. I do have the ZB. And same thing. There's that same double signal right there that we'd gotten over on the trade station, showing the same setup. You can see the same time frame that we were looking at. The other one was right around 6 o'clock, 6:30 range. So around 6:30 we saw a initial down entry right here. rolled back up and exited right into the hour before the open of the regular market. And then it started to trend up. And there was the opening of the market. And this became, what time? 9:45. So that's right at quarter after was when the initial signal for that one came in. We are right in an overhead, really dark zone. A lot of strength here, but the top of that looks like we've got quite a few different ranges. So that means that there's been quite a bit of overhead resistance in this whole area. So it might or might not continue to break through, but right now it seems to be responsive buying based upon the other markets. The sell-off in the market, all the weakness in the market's probably coming out in terms of strength in the bond. The market does open at 720, I see. Yep, so this is right at the opening of the bond market then. That's true. Thanks, Reg. I appreciate that. Not a problem. Not a problem at all. Crude oil had some pretty spectacular moves this morning off of the London Open. I have not traded it this morning, but looking at the London Open, you can see that right here, right at the opening, okay, price rallied right up into the open of the London market, and then you can see there's the sell-off right there. There's the volume that's showing you the weakness in that direction and the push back down. So you can see the trend started right at this point, and that was the initial signal to enter based upon the weakness that was seen at that point. So this right here became the initial entry. And it struggled for a while. It looks like you probably could have been stopped out based upon this level here. If we were to apply our rules at that level, then this would have stopped you out right there. So if you had taken an entry point right here, you would have been stopped out right here. Right here is a re-entry point right there. And then that would have taken you straight to profit. So always take your stops when they're presented. Don't ever sit and hope and wait and wish for price to go in your favor after it's gone against you. Always follow your rules and make sure that if you have a stop in the market, to take that stop regardless, because this single level stop that you took was very quickly erased, and now you are up 2 levels and waiting for the price to continue down. Okay. There's your level 5, there's your level 7, and so forth. So follow your rules. There's an initial signal right there. There's another alignment of the trade right there. So the risk that you have in the trade, current direction of the trade, overall trend of the trade, you're coming down into a known region. We've just broken a prior support, but now you're coming down into another one. So you might want to be taking your profits pretty quick on this one, because this might not have a long way to go. And after an extended run, you're coming late to the party. So this might or might not be a good entry point if you're looking at taking these trades. If you do take the trade at this point, then like I said, because of the extended move that's already taken place and the current position with regards to support and supply, then this right here, I would take my profits any chance I got. The fat boy is saying that the crude oil is on a nice trend of weakness. So that's looks like a continued sign. This short building of strength was simply the correction that we saw right here, and now it's starting to turn back down and continue. So it looks like it can have a nice range. Gold obviously is looking like it's building and continuing with strength, as is the bond. So the bond and gold strength relative to that weak oil is a consideration there. We probably have oil inventories coming out today at 10:32, so that's one other thing to consider as you're looking at this move. There's no reason for it to not continue. This is showing a really nice trend down. So there's really no reason for it not to. So strong gold, strong bond. A previously strong oil has turned weak and extremely weak markets. NASDAQ, S&P, the Dow Jones, probably the Russell as well. Gold has moved over to the August contract. So the volume's going to be split just a little bit, but right now the August contract is trading at about 1270. So looking at this, we're in an initial trend run long. A break, but we are coming up into overhead resistance. Price has been here, likes to hang out here for some reason. So I'd be taking my profits pretty quick too on this, because it is also a good extended run also. So it's the last possible leg of an extended run. If you take a trade, take your profits off the table. Don't hold this for the duration, because longer term we're starting to see volume coming against that. So trade safe. Don't be unwise. Just because you get a signal that says to enter doesn't mean you have to enter. That's what the filter tools are for, to help you to use your trade wisdom wisely. Reg says there's also an API report later as well. So thank you for the heads up, Reg. Did everybody get to take advantage of the Memorial Day specials we had going on all weekend? To pick up on all the tools that you didn't have a chance to get? Nice 20% discounts. I hope so. It just ended last night at midnight. So Dennis, if there's something that you're interested in, then I'll be more than glad to apply the discount to you since you were traveling. Didn't have a chance to do that. If you send me an email, randy@hawkeyetraders.com, or to support@hawkeyetraders.com, let me know, and I'll see what I can do for you. All right, it's kind of quiet in here today. A lot of trading action going on. Markets are really coming down. NASDAQ looks like the first to be lipping up right here. You see that? So the NASDAQ probably had a lot of weakness coming in, but you can see we've got a nice money bounce going on over on the S&P. The NASDAQ's broke down. Looks like it's retesting. Looks like it's coming back pretty strong too. See the green volume bar? The wide bar? High probability that price might bounce back up into the mid-range of this wide bar right here on this 12-minute price bar, which is about right there, 57.90. And the YM. Looks the same. Really nice signal off the entry right there. Small consolidation, really nice trend move. Prices have not even challenged the trend dots until just now. It's coming right down into support, just like the S&P. Notice the huge amount of selling going on as price entered that upside resistance. Those are things you're looking for when you're watching for these setups, because this came 1 hour before the actual down move occurred. And that was, what, 8 o'clock? 8:30? Right there. Okay. So that's plenty of time for you to be able to watch your setup charts. And then even with a 15-minute delay, you still got a very nice entry signal and a nice profit take on that, just following the rules. Philip, the gearbox on the NASDAQ. So let's run over and look at those. Okay, on all of them. Yeah, they're start to see that. On the S&P, you're mentioning the gearbox. You can see how the market has gone into a huge amount of volume and volatility prior to the current market action. Okay, so you could usually when you see these huge swings in the market, you expect some response out of the market when you see those. So looking at these levels, you can see the values are considerably less than they were just 1 week ago or just a few days ago. But after today's action, you're going to be able to see that this is probably going to spike right back up again. Anytime the market goes down, you'll probably start to see these huge spikes in volume and volatility. As you can see, the volatility itself is already starting to expand quite a bit. Pull this back to a 3-minute, a 5-minute. So you can see that. Look at the volatility just really just starting to expand up. I'll go back to a 3-minute and I'll just keep it at that point for now. I'm a little bit surprised at the KISS, although it's showing some extreme bearishness on the KISS. I'm surprised it's not higher in value. Notice how very tight all the markets are, highly correlated. The fat boy is showing you that the correlation and the direction of the markets are very tight. So we're going to see some really good trending action based on this. You start to see them spread out like this, then they will start to be decorrelated and congested. And that's what you would expect to see from that type of a fat boy. But did you have a specific point, Philip, that you were making as far as this? Yeah, when you see these spikes and the declining volatility, that's usually an indication of an upward move or bullishness coming into the market. This bearishness is usually what results from this. You see huge expansions of volume, then that's exactly what you would be expecting in the market. is a downward move as a result. Sorry about that. I'm babysitting my son's dog. He was off in Brazil this week, so I was watching his dog for him. So I hope that helps to see. You'll see tomorrow, based upon today's volatility and uh, the move down that we've just seen. You're probably going to see a large increase in the tick settings that we're going to be using for tomorrow's market. Mm-hmm. So about 9 minutes, we should see some news coming out on crude. Let's see, longer term. What's crude oil looking at longer term? I'm spending all the time on the futures markets this morning because that's where all the questions are. If we have forex traders have specific questions, or any of the longer term equity traders, if you throw me some questions, I'll be more than glad to give you a show or demonstrate that for you as well. What's the downside of this weakness in crude oil? Right now, we're still seeing a nice downtrend. You can see a low. Here is a lower high. Here is a lower low. Here is a new lower high. So we are still continuing a confirmed downward trend. You can see the weekly chart is in a downtrend. The monthly chart is in a downtrend. We are in congestion. We are waiting for a break of that congestion. We have already broken congestion on the weekly, and the daily is just going back and forth from trend change to trend change. So, but it's still in a longer term confirmed downtrend, and we are just now moving in that direction. You'll probably find when you're in a downtrend that price tends to move more smoothly in the direction of the overall trend rather than the corrective moves. These are corrections. These are continuations. Gold. Gold market is still consolidated. You can see on the monthly chart we are consolidated. You can see on the fat boy that we've got a nice trend of strength in gold, but it's topping. See, it's starting to flatten out here at the top. And you can see on the weekly chart we are in congestion. We've got an upper and a lower range. And on our daily chart we are in a corrective long move right here. So this is a long trend in conjunction. This is a long trend, green trend dots, and we are starting to get at new highs. So it looks like we are in a correction phase of a long trend between the upper and lower range here. This is the last pivot low, and this is the last pivot high based upon that price. Oh, good. Someone had just told me that the oil inventories report has been moved to Thursday this week. So that's good news. I normally have to battle with that anyway, but that's good. Glad to hear. It doesn't look like, yeah, we don't have any news out today at all until 2 o'clock now. Tomorrow, yep. So tomorrow's calendar looks like we have quite a few things coming up. 8:30 tomorrow morning, we do have unemployment claims coming out. At 10 o'clock is the ISM manufacturing number. And then at 11 o'clock, rather than 10:30, we've got the crude oil inventories coming out. So they changed the channel and the time of the report. Now it's tomorrow at 11 rather than today at 10:30. Good, thank you. I appreciate that. Pirka, thank you. Any other questions before we close down class today? It's been a relatively focused session today. I haven't even covered forex at all. You're very welcome, Mike. Yeah. Wow, look at the move in natural gas. Look at that. Huge volume spikes at the highs. Is that telling you it's going down? I dare say. But that's a huge move. Must have been a huge report that came out. Had to have been. Natural gas isn't until tomorrow. June 2nd. No, wrong way. Today. What time was that? About 8:30. Ah, Canadian GDP. As oil and gas goes, so does the Canadian. There's a high amount of correlation between the Canadian market and the oil and gas market. So that could have been related. The bar that is a cause for caution, this is the one right here I was looking at right here. Let me magnify that and show you that, TJ. Because what we're looking at is a new high price on opposing volume. And this one happens to also be a pivot high. So those are the ones we're looking for, either a phantom or a actual true isolated high where the volume is opposing the direction of the trend. Okay, that's what we're looking for. That bar came right about 8:06. The news bar came at 8:39. So that was about 33 minutes before the actual move took place. You couldn't have traded that. There was no signal to trade this. There's no entry signal. But this is just showing you the power of volume and what volume is telling you ahead of time. This is a very risky trade, but you would not have gotten a trade entry on this not until right about there. It's the first point that you could have taken an entry right here based upon our rules. And we're trying to minimize risk and maximize reward. So this would have been the highest probability point to take with the lowest amount of risk. But then you can see the amount you would have made on that would have been much less than the amount you would have made here. Obviously. Risk and reward. That's what it is, what it's all about. Any last questions then before we head out? Is anybody not part of Hawkeye that wants to get started right now? You seen what you like? I can make you a very good special offer today if you're interested. Because volume is such an important element of our trading, we have a very good special to get started on our Hawkeye volume starter package. If you go back over to Hawkeye Traders website, hawkeyetraders.com, if you click on the store button, then you can see the Hawkeye starter package right here listed for $360. Gives you the Hawkeye volume module, which is the volume radar, the volume paint bar. We also include the pivots and the wide bar give you access to our Skype chat group, the Inner Circle, give you all of our written and documented trading rules, full access to the whole membership site, not just a specific area, but the full membership site, and our on-demand video library. You get all of that, not for 360 bucks, but for, let me paste that here. Wait for it. $97. You get the exact same thing, the volume paint bar, volume radar, the pivots to the wide bar, access to all the member training. Oh, and you get a bonus 2-hour on-demand special training course on how to use Hawkeye Volume. Here's the link here. When I get to there, it's hawkeyetraders.com/WED or Wednesday. For any of the platforms that we currently support, TradeStation, NinjaTrader, MetaTrader 4, eSignal, and MultiCharts. All right, thank you very much for your time and for your attention. Since there were no other questions, no other requests for a demonstration, then I will sign off for today. This recording will be made available on the Hawkeye Traders website. If you go to the Hawkeye Traders website, hawkeyetraders.com, under the Education menu, click on the Training Room videos. Last week's video is located right here. Previous week's videos are located right here. Once I load in today's video, then the last video is going to go off, and the current video is always going to be displayed there. If you're a current member with Hawkeye, then all the videos are located in the current members area. So if you click and log over to the Hawkeye Traders membership area, then not only do you get access to all the training rooms, to the products that you've purchased, and the videos associated with those, but you get access to the full resource library. Within the resources library, you get all the previous recorded content, including the 3-step entry-exit method, the 6 ways the market moves, another copy of the Volume Secret if you don't already have one, and then all of these special mentoring sessions, the 21 2-hour sessions that we covered, all the indicators, and all of our special focused monthly trading workshops. You've got all of that video content, hours and hours and hours. Here's all the Wednesday videos. You get them all. You get them all. There's tons of them. And as a special member, again, if you have special upgrade prices under the upgrade menu. So if you haven't already done so, you can take advantage of these upgrade prices right here, which are considerably less than the store. Thank you for joining me today. Bob, good to see you again as well. Thank you, TJ. Appreciate it. Mike, you take care. Thanks for your feedback. Philip, it's nice talking to you. You guys take care, and I will see you at the exact same time next week. And if you are part of Hawkeye, then the monthly training workshop is tomorrow. So I will see each and every one of you tomorrow for our hour-long monthly workshop training. Thank you very much, and you have a great rest of your week. And bye for now.